Good afternoon, everyone. Today is Friday, the 5th of October, 2012, and this is Brian Shannon from AlphaTrends.net speaking. Today's video is brought to you by Realtick, as it is every Friday, so go ahead and take a look at Realtick.com because that's the charting platform that we're looking at right now and the trading platform that I use as well. Let's take a look at the closing numbers for the market for the week because it was a constructive week. You can see the S&P was up 1.5%, NASDAQ up about a half of a percent, the financials up 3%. So we had, I think it felt a little bit worse, maybe because we ended on a slightly down note today. The S&P 500 was up a little bit, but the NASDAQ lost a little bit of ground, and we came off of the highs and where the market opened pretty significantly here throughout the session. So that's what made it feel a little bit worse, but it was a constructive week. We look at that daily time frame. We've had this trend line right here, just below that 20-day moving average, and that's been holding. That we got that bounce from, and we haven't made a new high yet in the S&P 500. However, we're getting right up towards that level, and the key this week was breaking beyond the 145.5 level. At that point, that's where we had our higher high above the rising 5-day moving average, and that put the buyers in control. Unfortunately, if you didn't get involved right away there, you had the gap up today, and it came right back down towards that range. So early next week, we're going to be looking for 145.25 to 145.5 to hold as some support. If we break that, then we'll want to get a little bit more on the defensive side. Otherwise, we do remain in an uptrend. We've got earnings season coming soon, and that's something to be aware of. But we remain in an uptrend, and as we know, only price pays. We can get news about elections and debates and world economies and that sort of thing, but the only thing that pays at the end of the day is price. And today we had the gap up. It looked like it was going to make another burst higher, but that failed. We broke the lows and stayed below the volume weighted average price, giving an opportunity for day traders only, I think, to sell short, because with a rising 5-day moving average, you don't want to position yourself in a swing trade for the short side until that 5-day moving average kind of begins to flatten out and turn lower, as it did over in this area. So the buyers are still in control. The NASDAQ, we were down 37 cents, and this is a little bit worrisome that we did break what we've been the level that we've been watching here at about 67.25. We did break above. I'm sorry, 69.25. We did break above that level, and we failed to stay above it. So this sets up the possibility of, from a failed breakout comes a fast move lower next week. Now it's not bearish yet. It's kind of just come back into this little range, and we found some support today near Wednesday's lows. 68 is going to be an important level for next week. I think if we break $68 a share, then, well, we'll be at the 50-day moving average. But I think we would probably get a flush through the lows of about a week and a half ago, just under 68. And if you look at the key, really the key component of the NASDAQ 100, that is Apple, of course. Apple is it got a bounce from the 50-day moving average, as we know. I mean, it did bounce from there for a couple days, and now we're back to a closing low. And what I've been saying on Twitter is that I thought, especially breaking below this 665, and this is something I was telling subscribers in the chat room, that breaking 665 would likely lead to at least a test of the lows, probably a move down towards $645 a share. You could look at this and say, well, isn't that a head and shoulders pattern? And yes, it is, but we also have a rising 50-day moving average, and a lot of times you get that first move down to the 50-day moving average, it bounces, it brings a lot of people in, and then people figure they're safe to buy it, so they set their stop just underneath that prior low. So I think it's inevitable that we're going to get a flush below that level, and hopefully we could see a quick violent sell-off in Apple down maybe towards the 645 or even lower. It wouldn't be a place to buy. It would be a place to say, well, this was a prior high, important high earlier in the year, so perhaps it will become a level of support if we pull back, continue to pull back and test that level. And to me, it seems inevitable that it will break below that low just to kind of shake those stops and that sort of thing. But as it relates to the NASDAQ, I think that that brings about a pretty high likelihood that maybe we get a bounce up a little bit on Monday and then head back down towards 660. 68. Either way, we as I said in the blog this week, there's been a lot of mixed messages from the market, and the semiconductors have been one of the areas that we've been concerned about. We've been talking about this breakdown, and that the important band of prior support from $32.25 to $32.50 is likely an area where there would be resistance found. And today we broke the recent range, which was 31.5 to 32. We ran right up into that zone and got rejected. Now we do have a rising 5-day moving average, but with all this prior support just ahead, as I had mentioned, it's good for a day trade, but when it gets up into that range, you have to tighten your stops, look at it and say, well, the market gets back below the volume weighted average price. It's time to move to the sidelines, because it's likely that this prior support level is in fact acting as resistance in real-time information as we see the market breaking below the volume weighted average price. So the semiconductors are still kind of trying to stabilize. Next week, if they can get above and hold above 32.5, then we would be a little bit better shape in here and think that we wouldn't be necessarily breaking down a lot further. But we still remain pretty cautious on this group with a declining 10 and 20-day moving average, and we're below the 50-day moving average. So let's see if this market doesn't prove to be, from a failed breakout here comes a fast move lower. If we break below 31.50 next week, I think that that's going to turn the picture back to bearish on the daily picture, where we're kind of trying to neutralize a little bit, and then it's likely we would take out that 31 low, and that wouldn't be good for the rest of the market. The Russell 2000, as we know, pulled back into this prior level of resistance a couple weeks ago. Came in pretty hard as well, and it's been stabilizing in there, and we had kind of the same thing in here. We've seen this range, which has basically been 83 to 84. Let's take a look at the 10-minute time frame. 83 to 84, 84.50 has been really our bigger range, and the band of support right now is 83 to 83.5. So we broke beyond that little resistance level, and things were looking good for a while until it broke back down below the volume weighted average price. You can see how today it held up higher highs and higher lows. It pulled back and then broke this support level, and from there, we had a steady sell-off throughout the day, so that if you were long on the breakout and you didn't protect yourself, well, you're in some hurt here. Now, maybe we stabilize at the 5-day moving average, which is back in the middle of this prior range, but it just seems as though this market needs a little bit of work. It's just kind of tired up in here, and we have to just stay focused on our key levels, which are the support down our 83.25, 83.5. And it's funny that we went from Thursday midday looking really pretty negative here as it tested the low end of that band, or the top end of the band of support, and bounced nicely from there. Well, we got rejected, so the market's still sending us some mixed messages here. Financials had the best performance this week. As we said, they had shown better than, 3% rally. So a better than the 3% rally, and this market pulled back to the 1550 level a week and a half ago, as we know, and then we broke this little resistance this week. This is where we had our higher highs and higher lows above a rising 5-day moving average. So the action at this point was innocent till proven guilty for swing trades, as it broke beyond this level with your stop below here. Now, it sucks when they gap higher and you have to chase them. That's always part of the risk, but that's the way the market goes sometimes. Obviously, and I think the key right now is still to continue to focus on individual trade ideas. I'm not going to give you any of those today. I will look at this one that I had mentioned today on Twitter, which is Millennial Media, symbol MM. They came public last year, or this year rather, and we've broken some resistance. That resistance is held to support. We've got a rising 10 and 20-day moving average, and while the market broke down, what's interesting to see is the short interest swelled from about 700,000 shares in May to 4.5 million shares in the middle of September. So it looks like those short sellers are kind of stuck in here, and now that we have that stock that broke a little bit of resistance here today from the last week and a half at about this 1485 level, it seems as though it could continue to move higher with a stop at about 1450. If you're not familiar with Alpha Trends, I have a premium subscription, and each and every day I do to outline a number of low risk, high probability swing trade setups. I don't always swing trade them myself. Sometimes I day trade them, and I encourage people to make them their own. I'm running a special on an annual subscription right now. Normally it's $799 for the year. It's just $399 for the year now, and you can find that link on Alpha Trends just below this video. If you want to take a look, go ahead and take a free trial to it. But this offer will expire on October 25th. So thanks for your time and have a good weekend.